Aksa, you're on mute.
Thank you so much. Thank you everyone for joining today's session. We are very happy to be organizing this session for you. October is a really exciting time for ACCA because Global Ethics Day falls in October, and it is a very huge cause for celebration for us. This time around, we have collaborated, ACCA Pakistan, ACCA Middle East, Sri Lanka and Bangladesh have collaborated with you, between us, to bring a great session where we have esteemed panelists from all over MISA to come in and give their point of views, give their thoughts and their opinions about ethical practices in the professional life of accountants. Today's topic is economic crime in a digital age, the role of regulators, which we will get to in a little bit. But before that, I just wanted to thank our partners for today's session. We have a great amount of people who and organizations who wanted to come on board, support ethical practices in accountancy, in professional life, in business, and we're very happy to have their support. So thank you so much to all of our partners for joining in today, joining in today's session. We have a lot of other resources besides these panel discussions that are available on our social media pages. You can see this session on our Facebook and LinkedIn pages. If you want to tag someone who would benefit from these sessions, please do. We would really like to spread the word around ethical practices as well. And we're very excited for this, not only this panel discussion, but we have 4 more planned in the next 2 days. So do check out your own local regions, Facebook and LinkedIn pages, and get the schedule from there. It'll be a huge event, and we're really excited to get your opinions, get your thoughts and all of these things from you. So thank you so much for joining in today's session, and I will thank our panelists as well. Before I introduce them, we have Mr. Amir Khan, Chairman, Securities and Exchange Commission of Pakistan. We have our own Sajid Aslam, Head of ACCA Pakistan. We have Dr. Inayat Hussain, who's the Executive Director of State Bank of Pakistan. We have Mr. Fawad Bayunis, Cluster Head, Information and Security Risk, Pakistan and Middle East for Standard Chartered Bank. We have Mr. Imran Furqan, who is the CEO of TraceSync Australia, and we have Mr. Dr. Mizanur Rahman, who is the Commissioner for Bangladesh Securities and Exchange Commission. So we have a very diverse panel who is here, who is going to be giving us thoughts in different countries perspective, different regions perspectives on this topic, economic crime in a digital age. So we're very excited. I will hand over to Mr. Amir Khan for his keynote address.
Bismillahirrahmanirrahim. Thank you very much, Madam. Ladies and gentlemen, Assalamu alaikum. Let me start by acknowledging ACCA MISA for consistently promoting
I believe there's some internet issue. We can't hear Mr. Amir.
Okay, let us try and sort that out.
Yes, I think, it's clear now.
Okay.
Yeah.
So let me start by acknowledging ACCA MISA for consistently promoting transparency and good governance. Today, I would like to focus on 3 things. Foremostly, I would like to touch upon economic crime in the digital age versus what it used to be. And secondly, share the lessons learned from a recent example. And finally, SECP's approach towards economic crimes in the digital age. As a child, I read stories about those who were tasked with apprehending criminals, especially in small towns and villages. One that instantly comes to mind is the work of a particular Major General William Sleeman, a colonial officer who in his book, The Thugs or Phansigars of India, showcases his campaign against criminal elements. Thugs were a group of criminals who skillfully concealed their identity from travelers, gained their confidence, and then killed them and looted them. In 1830s, Sleeman successfully waged a concerted attack against the thugs that involved, among others, a web of informants, a specialist mounted police, judicial methods with regard to both the admission of evidence and the trial of prisoners, but most of all, equipped with his grit. At the time, it became the enforcement gold standard to counter criminal enterprises. And even today, it offers lessons that I'll come back to later on. Today, economic crimes extrapolate at a faster pace, are multi-layered, and infiltrate large base due to social media and tech-enabled platforms. Geographic location is no longer a limitation, as technology has changed how market players interact, how investors engage actively across jurisdictions, and how the participants derive incentive. Also, the use of fear and greed as basic ingredients of criminal schemes have evolved with increased focus on taking advantage of their targets' gullibility due to lack of knowledge and trusting nature of most humans. So we can conclude that in the digital age, the tools and landscape have evolved. A criminal no longer has to hold out a gun or break into a home. Rather, unfortunately, technical platforms have digitally opened the doors of victims' lives and their assets and have empowered criminals to generate interest and spread misinformation at an alarming pace. This brings me to the second part of my speech. SSCP recently concluded proceedings against a group of companies and numerous associated unincorporated undertakings for raising illegal deposits from the public by operating multi-layered pyramid schemes. The companies were incorporated with the declared objectives of undertaking trading and real estate businesses. Now, we all know that pyramid schemes are about as simple or vanilla as a fraud goes, but the rise of this group was surprising and exponential due to their social media outreach. To enhance the reach of the scheme, lucrative awards for onboarding additional investors were publicized in electronic and social media. Even during the legal proceedings, the group aggressively misadvertised through various social media campaigns to continue to confuse its victims and even sponsored CSR activities for gaining sympathies of public at large. As the matter was brought to SECP's attention owing to the complaints and queries received at SECP's social media accounts, a multi-pronged strategy was put into motion by SECP that involved, firstly, requesting the telecom regulator for blocking false and misleading social media content associated with the group as and when it cropped up, simultaneously coordinating with the central bank to obtain relevant banking information related to the group and its sponsors, and finally working with law enforcement to shut down the fraudulent activities of this enterprise through an internally formed dedicated group that was created to handle this particular scheme. Consequently, SECP was able to disqualify the group of sponsors from holding a directorship for 5 years, impose large penalties on each of the sponsors, debar them for incorporating any new companies, and simultaneously, SECP was able to work in close collaboration with law enforcement to present a unified response in the courts to hold the sponsors accountable. And resultantly, the key sponsor is behind bars. The lessons we can take from this are, foremostly, regulatory agencies must act with a sense of urgency and grit to tackle resourceful and hardened offenders. Secondly, social media should be used not only as a monitoring tool, but also to educate and encourage whistleblowers to highlight abusive and manipulative schemes. And lastly, the importance of speedy collaboration and alignment between regulators and law enforcement agencies cannot be overemphasized. Now, moving to the third and final part, I would like to touch upon priorities set by SECP. Firstly, institutional transformation. In this regard, the enforcement function has already been streamlined through creation of separate supervision and adjudication divisions. The separation of these two functions is critical for improving efficiency, transparency, and overall success of the enforcement mechanism. Likewise, a comprehensive digital strategy to support the enforcement activity has also been rolled out. In addition, investigation and prosecution have been improved through specialized trainings, focusing especially on technical subjects. And finally, we are also working on adoption of XBRL in Pakistan for improving uniformity, reliability, and accuracy of financial reporting. The second area of priority is supporting a culture of innovation and meaningful candid dialogue with stakeholders. I firmly believe that a regulatory regime that is too harsh or too inflexible provides ideal breeding ground for fraudulent schemes, which is why we are in constant touch with industry stakeholders. It is also with this mindset that SECP launched its regulatory sandbox in 2020, encouraging young entrepreneurs and nascent startups to bring forward their ideas and conduct limited scale live testing of new products, services, and business models. The final priority in developing a close and meaningful collaboration with other regulators and law enforcement for cohesive enforcement. For instance, in case of pyramid scheme, I talked about joint and prompt response of law enforcement, SECP, and other regulators prevented offenders from evading legal consequences and spreading their actions. This brings me to the end of my speech, how to move forward. I believe foremostly, this requires what Sleeman used in dealing with the thugs, acting with a sense of urgency to tackle the issues head on. Secondly, using every avenue at one's disposal to fight the good battle. And thirdly, by being creative and flexible along the way. In addition, I think focus must be placed on implementing AI-enabled solutions for monitoring purposes, and also having dedicated teams within the enforcement function of the regulators, along with specialized legal capacity to blunt technology-enabled fraudulent schemes. I would also like to add a word here about auditors and financial sector experts. They must understand the enhanced expectations of stakeholders regarding accuracy of financial reporting and their comprehensiveness. And they must step on to take on this added responsibility. And finally, even at the expense of repeating me probably for the second time, I would say that regulators must not work in silos. Rather, they should inculcate a culture of purposeful dialogue, both within the organizations that they represent and other organizations in the regulatory framework, as well as with external stakeholders, to efficiently assess relevant risks and proactively and effectively deter criminal activities. In the end, I would just like to commend ACCA once more for its efforts in promoting a culture of compliance and disclosure through multi-stakeholder engagements. Investors, companies, regulators, and stakeholders like yourself and ourselves must synergize to root out economic crime in the digital age. Thank you.
Thank you so much, Mr. Ahmed. That was very, very insightful. And I have a few questions, but I will not ask them right now because I would want to leave room for our audiences as well. So thank you so much. That was very insightful. I would like to highlight one of the points that you made, that we have to be creative in our regulation as well, because economic crime is getting creative right now. So I think we have to kind of tackle it like that. So thank you so much. That was a very, very insightful keynote address. And we thank you for your participation and for all of the work that SECP has been doing. Thank you so much. I would now like to hand the floor to Sajid, who will be conducting the panel discussion and also giving his thoughts about the topic as well. We love hearing from him. So thank you so much, Amir, and I will now be adding Sajid to the stage. Thank you.
Thank you, Aksa, and thank you, Amir. Thank you very much. I think you have highlighted a couple of things, and we were just before even the session, we were talking about what SECP is doing particularly innovatively. The sandbox concept was very, very great and very well received. At the same time, the use of technology, which we are seeing more and more from a SECP perspective, I think that's also very, very commendable. Just going back to the topic we are picking up, it's an economic crime in digital age and the role of the regulators. And if you look at the current scenario, the trust, accountability, and integrity are fundamental to relationship that enable trade, build society, and support economies across the globe. And that trust, accountability, and integrity is something which is the fundamental for us while we are creating those kind of relationship. And this faith the decision makers now put in the information is changing as the nature of information and indeed the decisions itself is transforming right now. And if you look at the recent scenario and the report which ACCA recently published around the economic crime in the digital age, there's an estimate which is shared anywhere between 1.4 trillion to 3.5 trillion, which get affected through that financial crime around the globe. That is way larger than the economies of many countries and even higher than the economy of UK itself. Beyond the purely monetary activities such as the bribery and fraud, definition can also include the cybercrime, slavery, and human trafficking in a recent past. Alongside the initial criminal activity, money laundering is a common factor affecting the stability of the financial system and in turn supporting and facilitating wider damage to individuals and societies and the businesses. And the term economic crime and financial crime can be used interchangeably. And there are many definitions of economic and financial crime, some based on motive and other are based on the actors involved. So as relationship grew, like when we are looking at the global economy and the technology has enabled the close coordination between the different businesses around the globe, as this relationship is growing more distant, where the people are sitting in a different geographical location, so the trust mechanism in the form of court, banks, and agents is also grew in their importance as well. Today, we have invited our esteemed panelists, which include Dr. Anayat Hussain, Executive Director of Central Bank of Pakistan, or which is called State Bank of Pakistan, Fawad Bayunis, and Cluster Head Information and Cybersecurity Risk, Pakistan and Middle East Standard Chartered. We have got Imran Furqan, CEO, Cressing, Australia. We have got Dr. Mizanur Rahman, Commissioner, Bangladesh Security and Exchange Commission. And my name is Sajid Aslam, and I'm heading ACCA in Pakistan. So, Dr. Anayat Saab, we will start with a very fundamental question. Like I mentioned, the overall annual global cost of financial crime is varying anywhere between 1.4 trillion to 3.5 trillion dollar at the moment. In your view, what are the key areas susceptible to corrupt practices, and who are the key beneficiaries? And I'll come back with a similar question to other panelists as well. But we open the conversation with you, Dr. Anayat Saab.
Thank you, Sajid. So it is a sort of very open-ended question. As you rightly pointed out, that there are diverse definitions of financial or economic crime, and they include, I mean, the array of incidents and events that can be categorized or defined as economic crime or financial crime is substantially large. They include embezzlement, they include digital frauds, and of course, money laundering is one of the sort of underlying theme that helps in laundering those proceeds of crime. Similarly, in terms of corrupt practices, I mean, its definition would be very broad. But in terms of, for example, ill-gotten funds that are not legitimate, I think in terms of developing countries like, for example, Pakistan, Bangladesh, Sri Lanka, one common denominator is undocumented economy, and in those terms, the tax evasion would be one major corrupt practice. The second, of course, is bribery. The bribery by the public officials and other people holding high offices. The third could be the ill-gotten illegal gains made through the public procurement, for example, practices. Similarly, the major development expenditures that are taken by the governments of these countries, they are also exposed to these risks. So these are the areas. In terms of beneficiaries, of course, the beneficiaries are the government officials who facilitate private sector in these sort of transactions, and the people in those businesses and firms that are engaging in these sort of practices.
Thank you, Dr. Saab. Thank you very much. And I think I'll bring the same question to Dr. Mizanur Rahman as well, like from Bangladesh perspective, and you are also one of our regulators. So how you see these corrupt practices being deployed, and who are the key beneficiary around these corrupt practices, if we look at that in a broader sense?
Thank you, Mr. Sajjad and ACCA Mesa for inviting me to join this distinguished panelist on this important topic. I think the classic role of regulator is to protect the interest of the investors, and economic crimes are nothing new for regulators, particularly for the capital market regulators. The rapid development of information technology and digitization has only redefined the space and complexity of economic crimes. As a capital market regulator, I will focus on the nature of this problem and how we are responding to this evolving challenge. In the capital market, economic crimes are generally committed by the nexus of controlling shareholders and top management. A type of agency conflict is underlying the commission of fraud and crimes. The agency conflict arises from the absolute control of family owners or a small band of controlling shareholders who dominate in corporate boards and exercise absolute control over the top management. Separation of ownership from management is increasingly blurred in this time. Digitization and IT only worsen this agency problem. Here, the external shareholders, bondholders, suppliers comprise the stakeholders who encounter the risk of mounting opacity and the expropriation from the nexus of the controlling shareholders and top management. In a modern corporation, traditional instruments such as board of directors, the role of independent directors, the critical board committees, including nomination and remuneration committee, audit committee, and so on, do not often work in an environment where regulatory bodies are weak or rule of law is weakly enforced. So I think this is the heart of the problem, particularly in the capital market in corporate world. And maybe in the next stage, I will share with you certain other specific experience from our part of the world and how we are responding to this crisis. Thank you.
Thank you, Dr. Saab. And I think you picked up rightly that it's not about only Dr. Saab. Dr. Anayat has talked about the crime which is being or economic crime which is being conducted by the people who are holding the public office, and they are misusing their position or their authorities. But we have seen the similar thing in the corporate world where the major shareholders are exercising the similar behavior, and they are depriving the minority shareholder. And with the nexus of the capital market groups or nexus within the capital market, they are trying to really siphon off some of the money towards their benefit rather than the benefit of the major stakeholder or other stakeholder. Imran, if I invite you in this conversation, if you would like to add something in terms of how you see that economic crime being taken place in the area where you are right now. You are from Australia, and what's happening there, and how you define the key corrupt practices you are seeing there, and who are the key beneficiary around it.
Thanks, Azad, and thank you for ACCA MESA for inviting me as well. So I have two hats, one from South Asia, and also the other one where I live and work as well. So I think from both perspectives, from the South Asian countries that I have connections with, I think there is a new emerging trend really about state-to-state economic activities, lending, huge infrastructure projects, the opaqueness of the newly emerging powers that are lending to other South Asian countries, where the terms of lending and the public debt that is being incurred, and then how those infrastructure projects suddenly, the ownership is changing from based on large long-term leases, economic assets of those South Asian countries, like Sri Lanka, like Maldives, and the kind of state actors who are coming into those. I think that is a big concern among the general population who see, their national assets, change hands, operational control change hands in a very opaque manner. I think that's a big concern as well. And also there's an emerging trend also, I think, of private sector corruption that nobody talks about in terms of procurement to the private sector, in terms of sweetheart deals with governments, in terms of, certain licensing and import restrictions and foreign currency restrictions. I think that's a concern that's coming up as well. And when you come to Australia, I think the concern here is about how much of that developing, illicit funding in the developing world ends up here, in terms of investment in real estate assets, in terms of economic, prosperity being continuously transformed from developing countries to developed countries, and therefore the kind of instability that it creates, and it kind of impacts us in an indirect way, right? So you see huge refugees trying to come on board, which has now really reduced, but that's because of the the corruption that seems to be coming here. Now, for example, Australia does not have a beneficial register of ownership, which is a big problem. So technically, you can't really know who owns either a property or a company or a trust. And the anecdotal evidence is that the richest of the rich from all parts of the developing world seem to be parking their money here, right? and sending their children here as well. So, and I think that creates a lot of instability in different parts of the world. I think there's big concern there as to we being like a hub for a lot of illicit money, and that continues to be a problem.
Thank you, Irman. And I think you highlighted a couple of things like private procurement. Yeah, you are very right that we are seeing that even in a private sector, the procurement practices sometimes are basically alluded towards those sweetheart deals as well, and the government licenses importing. But I think the most important thing which you highlighted, and Dr. Naitsab, I'll be coming back to you on that, it's a flow of money from a developing country to the developed country, and then the kids, like you highlighted, their children are then going subsequently there to study and live there. So there is a certain parking mechanism and the flow of money, which is definitely one of a concern, which is not being reinvested within the same country, not even in a legitimate way, and even that money which has been taken out, that's going out of the country. So Fawad, before we move on, I would like to have your comments on the similar thing, and if you can also add the concept, like how the cybersecurity can also contribute towards that when we are looking at the economic crime, how we can identify those patterns, and how those corrupt practices you are seeing around the world, as well as particularly from you are coming from a banking side. So the flow of monies, how they are moving, and what regulators can do to identify those flow of monies.
Sure. Thanks, Sajid. With the economic crime, the discussion that is happening, one of the basic risks, or one of the, I would say, the highest risk for a financial institution is cyber security. What we've seen is with the pandemic, this has actually caused a global shift to remote and hybrid work, and which has actually forced organizations to change the way they have been actually operating. And this has happened overnight, with some of the organizations having less controls in place, or some of the organizations not even having certain controls, and not prepared at all. So basically, the cyber criminals, what they saw was an opportunity coming in. With the digitization, with the technology being enhanced, and the changes that is happening. So the areas that basically gave them an opportunity was the digital platform that we've been using, and that most of the organizations are actually trying to adopt. We go on the internet. We use internet for transactions. We go on the web to sell and purchase items. We are using emails now for communications because most of the people are now working from home. So the environment has completely changed. So the corrupt practices we saw were like rise in the ransomware attacks, and where organizations' informations were just stolen, or were not accessible to the organizations, with an average downtime of at least 6 days, which in some cases have brought the industry down. And having major financial losses. And along with that, we saw a rise in phishing and social engineering attempts as well, where these criminals started getting information from individuals who were weak, who did not have that awareness of who to share information with. And they took that advantage of as a benefit to either selling that information across to other organizations or putting it on dark web. So dark web is one of the webs where they start selling information and for monetary gains. And there are state-sponsored attacks as well, where organizations do not want other organizations to actually come into as a competition in the industry. And it could be from government bodies as well as from organization or industry standards perspectives. And what we've actually seen is that from a regulatory perspectives, State Bank has been quite proactive in terms of getting the regulations done, obligations there as well, and setting up advisories to the institutions where they have provided certain control testing mechanisms for the organizations to test how the controls are implemented, how good are we from cybersecurity maturity state perspectives. But of course, this is evolving. Cybersecurity is evolving, and we see that because the threat landscape is growing, it really becomes difficult as well for cybersecurity professionals to embed everything together. So it has to be a strategical approach, I would say, from cyber crime perspectives or cybersecurity perspectives.
Thank you, Fawad. Thank you very much. And Dr. Nath, I'll come to you with that. I think Imran raised a very interesting point in terms of flow of money. And we also have seen the similar thing coming from Mizanur Rahman, and Fawad is also talking about the corrupt practices which is taking place. And now somebody has got that money, and most of the time that money flow has to be managed in a way that it can be used subsequently. So as a central bank, and I'm sure there are other central banks, so what's your view around those flow of money, and particularly from developing countries to developed countries, the money which does not have the legitimate source and still it's flowing through the banking channels? So how the regulators are seeing that, and what kind of responses they are generating, and where we still lack that way, because we are still seeing a large amount. We are talking $3.5 trillion at the moment. So I think that's quite a big money which is flowing through that financial system one way or other. So your views around it, and how the central banks are collaborating around that.
Yeah, thank you very much, Sajid. So yeah, it is. I mean, it has been pointed out time and again that the money generated out of corruption and financial crime, it ends up actually in 12 countries. And of course, there has been consistently there have been calls from the developing countries that the developed countries should do something about that, and these amounts should be returned to the developing countries. But from my perspective, I think that we should first try to put our own house in order. So, as you rightly pointed out, that these proceeds of crime, these are generated in developing countries, and then they are laundered through the developing countries to reach to their destination in developed economies. So now, from the perspective of a supervisor, our role is actually limited to the financial institutions that we regulate. So for example, first sort of the first thing that we intend to, and we are concentrating, is that to make sure that this sort of money is not introduced in the financial system. Actually, what we call actually the stage of placement in money laundering. So that is achieved through ensuring a robust know your customer and customer due diligence. So in Pakistan, for example, we require that every person who wants to open an account has to go through a biometric verification to verify his or her identity. So that is one. If you want to open, for example, an account of a legal person, then of course the requirements are different. You have to actually provide the articles and memorandum of association, etc., etc. Once you have established your identity to a financial institution, the next is that the type of account you are opening and the amount of turnover that will take place in that account. For example, the money that you want to deposit in that account, you need to provide sufficient evidence to the financial institution to satisfy the financial institution that the money that you are depositing in that account or the turnover in the account is commensurate with your profile. So that is the second. The third is that, of course, we are all human beings, and there can be sometimes breakdown in controls. There can be collision with the people who are working in financial institutions. So the next step is that if, for example, this sort of money is introduced in the financial institution and the transaction do take place, then there should be within the financial institution there should be a second stage or the second check whereby these sort of transactions actually identified by the financial institution. So we require, and it is not only us, it is all the regulators across all the jurisdiction. We now require the financial institution that they should have in place a reasonably sophisticated transaction monitoring system. The sophistication of that system would, of course, depend on the sophistication of the products and services that are being offered by that financial institution. So the objective is that all the transactions that are going through the financial institution, they are properly filtered, and if there are any suspicious transactions, they are identified by the financial institution. Then there is, of course, a mechanism that those suspicious transactions are to be reported to a financial monitoring unit, which then sends these transactions to the law enforcement agencies. During our on-site examination as well as our off-site supervision, we keep on evaluating the effectiveness of these checks and balances that have been put in place by the financial institution. But I think the important thing is that in order to effectively address this problem, it is very important that this issue is tackled from its origination till its end. So, for example, the people who are apprehended during this exercise, there is a need that the law enforcement agencies, in addition to the financial system, law enforcement agencies should have the capacity and the capability to effectively investigate these crimes. Now, the white collar crimes or the economic crimes or the financial crimes are very different than other types of crimes, and their investigation actually require a whole deal of different skill set, and we have sometimes seen that the law enforcement agencies, or at least some law enforcement agencies, lack that skill set. Now, once these sort of crimes have been investigated, then the next stage is, of course, the prosecution. Now, at the prosecution stage, again, the lawyers should have the necessary skill set to prosecute these criminals, and at the same time, the judges who are hearing these cases and who are going to make a judgment call on those cases, they should also have sufficient expertise to understand these crimes and to then make a decision. So it is very important. Until unless all pieces in this whole they work optimally, unfortunately this problem cannot be addressed. Now, in addition to the money, illegal money flowing through formal financial sector, unfortunately in countries like us, there is, as I earlier pointed out, there is substantial undocumented economy, and there are parallel modes of transfer of money from country A to country B. And again, it is important that the law enforcement agencies, they should have the necessary expertise to tackle those modes of transfer of value. Because if, for example, a fraudster cannot transfer money through the formal financial sector, and he or she can do it easily through the informal sector, then that is not very helpful. one important issue that we have also experienced during while tackling these sort of situation is the evidentiary laws in developing countries. It is as I explained that the white collar crime is very different than other types of crime. So the way you actually prove that crime in a court of law requires a whole different set of evidences than the normal evidences. So, but the good thing is that a lot of work is being done by the legislator in putting in place sufficient and a proper legal framework to address this issue, and the regulators and other stakeholders, they are also playing their role. Thank you.
Thank you, Dr. Saab. I think you highlighted a very important connection there. So there are courts, there are law enforcement agencies, there are people who are lawyers who have to prosecute that, the law itself, and then it's come to the banks as well as to agents. Once it's come to build that the entire mechanism or a value chain which can create a deterrent for that economic crime. And if you look at and we compare the developing country with the developed country, I think it's not only the regulator, you rightly pointed out, their laws and the codes, they are very effective to really prosecute people and to create that deterrent, or at least the fear that if any such criminal activity takes place, there is enough evidence or enough law enforcement capability exists there to prosecute that kind of crime. So thank you very much for that. I think that's an important area to highlight, that it's not only the regulator, there has to be a parallel once the crime has taken place. So the courts have to take action, and the law enforcement agencies and the evidence, the law related with the evidence should be in place at the same time. Fawad, I'll come to you. Dr. Nath has highlighted a couple of things. And now we look at the digital flow. You picked up the dark web and you picked up a little bit around the how people can do anonymously, they can do those transactions for the monetary gains. So how the cybersecurity or a cyberspace can play a role to identify those people and hold them accountable for that. And then it comes back to the same, whether our legal systems exist in a developing or even a developed country. If those people are identified, do we have enough capability to really prosecute them? So over to you, Fawad.
Thanks, Sajid. So I'll just take a few words from Dr. Saab in terms of how the monitoring actually takes place. So from institution perspectives and in the world as well, we've got quite a few areas of control where monitoring actually happens. There are cyber control centers where any suspicious transaction, which we call it, or any suspicious activity where phishing attempts are happening, or there are threat actors who are doing any social engineering attempts, or if there is any sort of ransomware attack where malwares are being placed, those are monitored. So those systems actually help in terms of assessing what sort of attacks are happening within the space, and that helps the organizations to basically do an assessment of where are the control weaknesses or where are the areas which can be actually focused on in terms of performing a risk-based method or risk-based security assessments. These feeds definitely, like in cyber, from cyber perspectives as well, where we talk about money laundering, how we actually monitor them, and the transaction monitoring systems. Similar to that, there are small tools and controls as well in different areas. So, for example, you've got certain infrastructure from technology perspectives where the digitization is going to be based. How do you control them? How do you monitor them? And those tools actually help you feed in that information to counter these sort of attacks. So, of course, from organizational perspectives, we would say yes. The organizations are quite mature enough. The knowledge is growing, but again, because the threat landscape is growing, the adversaries, they actually come up with new ways of attacks, and that becomes again a challenge in terms of how do we secure. You might have heard about zero-day attacks, where those vulnerabilities are not known to us, and they are exploited, and where organizations cannot do much, because even though they have implemented those controls would still not be helping the organization. So proactive work on those aspects, and a risk-based approach in controlling and looking at those threat exploit points which we are not aware of, or which the organizations are not familiar with, plays an important role. So from having a centralized organization, so again, taking up the point from the AML perspectives, that we've got a centralized unit or department where the reports actually are taking place. From cybersecurity perspectives, we are yet to have that formulation done at country level. We've seen in other countries where there are cybersecurity centralized units, where any breach, if there is any data breach, if there is any cyber attack, they are centralized in terms of informing those central bodies, which help them to communicate to the other industry colleagues and other industry organizations that these are the attacks that are actually getting on a rise. How do we actually combat? And because combat from cybersecurity perspectives has to happen in a collaborative manner, there is a need for us to have a centralized area in terms of monitoring, in terms of reporting as well. There have been certain initiatives, I would say, from regulatory aspect, where where the regulator would want and is working on formulating a cyber emergency response team, and that cyber emergency response team is going to function in the similar manner, but it is yet to come. So we are getting there, and however, the pace needs to be further strengthened from our side.
Thank you, Fawad. Thank you very much. And that's bring me to Dr. Mizanur Rahman. And we were talking about the flows from the financial system. At the same time, you are regulating the capital market, which itself handle a big cash flows as well, and a lot of investment scheme which are being offered by the government to really attract the new investments. And at the same time, as a Security and Exchange Commission, you are dealing with the artificial personalities, which are the companies and the corporate side of it. And whenever we are seeing these crimes are being taking place, so they are not taking place directly in the name of the individuals. They are always vehicles behind which they are using, or there's a chain of vehicles sometimes which are being used to commit this kind of crime. So as a regulator, when you are looking at the capital market, you are looking at the registration of the companies, and then the flow of money within those companies in form of the accounts, audit, like Ahmed has highlighted as a security and exchange person of the Security and Exchange Commission of Pakistan. So how in Bangladesh you are dealing with these challenges, which might trigger or at least highlight that some of the things which are happening are not as kosher as we would like to see them?
Thank you, Sajid. I will share with you one case of economic crimes with some form of anonymity because of the regulatory aspect of it. And I will try to draw policy implications for the regulator. Take the example of a foreign-owned composite textile company with an annual turnover of more than $125 million and a workforce of more than 1,500. The foreign family owners control the board, had occupied the top management position. They orchestrated an elaborate fraud scheme and laundered millions of dollars over a period of 6 years. Initially, the company reported that it had issued pre-IPO placement shares worth $32.5 million in consideration of cash to 11 family shareholders, jointly accounting for 60% of the placement, and to 73 local shareholders, jointly accounting for 40% of the placement. The corporate management had issued a corporate had used a corporate bank account to redirect corporate cash flows as share money deposits from the foreign and local shareholders. In fact, the shareholders paid not a single dime. The controlling shareholders reached an MOU with a local agent in 2016 who had organized 73 local shareholders and managed to issue pre-IPO placement in favor of them. The MOU stipulated that the local agent would manage books of accounts, make all regulatory filings for an IPO, and finally go for another repeat public offer after 3 years of IPO. As planned, the IPO was approved by the regulator and the shares began trading in the exchange. The local agent and the managing director of the company opened 2 corporate bank accounts with forged documents, collected share money deposits from some 40 local shareholders, and laundered the sum to their private benefits. The other local shareholders who did not pay for their pre-IPO shares were allowed to liquidate their positions and leave the market. It is believed that the local agent and the managing director of the company were the ultimate beneficiaries of all this sale. They also began abusing IPO proceeds once IPO was approved, and that triggered regulatory actions. Inquiries and a special audit followed. The findings are very revealing. The controlling shareholders, who included chairman of the board and managing director of the company, they both belong to the same family. They laundered $124 million by telegraphic transfer to their offshore bank accounts in the name of procurement of property, plant, and equipment. A special auditor found no verifiable evidence of property, plant, and equipment. The corporate management further laundered $100 million by serially overstating imports of raw materials over the last 5 years. The utilization of loans and borrowings worth $100 million from 5 commercial banks is also unknown. As I said, the MOU empowered the local agent to take charge of books of accounts and regulatory filings on behalf of the company. It appears that the annual financial statements were not prepared and presented on the basis of true books of accounts. Key financials such as property, plant, and equipment, accounts receivables, inventories, loans and borrowings, sales, cost of goods sold, and operating expenses were false and fabricated. But the financial statements were duly audited by independent auditors over the 5 years. There are 3 different audit firms also certified their corporate governance practices. 2 issue managers did the due diligence before filing for the IPO. A credit rating agency issued an investment grade rating for the company. It appears that the entire value chain was either complicit in the fraud and money laundering or ineffective to do their job, or both. It all began with the family owners who wanted to maximize their private cash flows at the cost of external shareholders, lenders, suppliers, and thousands of workers, and the society at large. A series of regulatory actions are in progress against many parties involved in this scam. Now you see, the public policy challenge is 2-dimensional. One is that regulators must have prudential regulations in place. The other is that the capacity of the institutions to enforce the regulations is very important. The developing countries have huge deficits in both the dimensions. Corporate governance regulation is one central area of regulatory oversight. It is often weakly defined in many jurisdictions. The nomination and remuneration committee, the nomination and remuneration of directors, particularly that of the independent non-executive directors, is difficult to monitor. Critical board committees often work as rubber stamps for the chairman of the board. Even the promulgation of internal control audit did not produce intended outcomes. Audit committee is another critical board committee to inquire and validate accounting system and monitor the preparation and presentation of financial statements. The role of the audit committee is compromised by the lack of independence of the so-called independent directors. In many jurisdictions around the globe, particularly in South Asia, the proportion of independent directors in corporate board is very low. It's too low to be useful. Any regulatory attempt to increase this proportion encounters organized political pressure from the cohort of controlling shareholders and family owners. The auditing of corporate financial statements is generally perceived to be not reliable. Audit opinion is often misleading. Audit independence is hugely contested. The engagement of audit firms is pervasive in non-audit works, major source of their revenues. Market for audit services is broken. As I explained before, auditors do often fail to detect gross fraud and financial crimes because of the lack of independence or lack of accountability or incompetence or both. External independent auditors sometimes knowingly mislead investors by omitting audit qualifications and bundling them under emphasis of matters or key audit matters. Audit fees are hardly reasonable in the developing world and often cut by weak audit firms. In many jurisdictions, Financial Reporting Council is now emerging to monitor audit profession and enhance their accountability. Bangladesh is no exception. We also got a Financial Reporting Council few years back. I think audit communication to corporate management and regulator is an area of critical review. As the keynote paper also nicely documented, economic crimes are more complex in a digital age. I think other speakers also explained cryptocurrencies, their anonymity, and how they are avoiding any central regulatory authority. I like to end here saying that digitization is complicating the task of regulator, and more so in the developing world where regulators are weak and the enforceability of law is also weak. So I think we have miles to go to make significant improvement in these very critical areas. Thank you.
Thank you, Dr. Saab. I think you have added a lot of other stakeholders. Dr. Anayat added the law enforcement agency, the courts, the agents which are working there and their capability and lawyer. But I think you have rightly picked up that there's a role of auditors and the accountants and the credit rating agencies. And we have seen the similar thing in 2007-8 financial crisis where a lot of stakeholders, including the regulator, they failed to really identify those patterns and create the appropriate response timely. So if you look at the economic crime right now where we are looking at, it's not the only role which a regulator can do in isolation. It's the complete value chain who has to work ethically, and they should have a capacity, particularly in a digital age, to understand those patterns, what's happening, and they should be able to deploy those technology to the benefit of the regulators or to benefit of the moral practices rather than really supporting the crime or otherwise. Imran, coming to your side, so your comment, anything you want to add on that? And after that, we will come to start looking from the recommendation, like what are the top 2 or 3 recommendations which we can talk about. And I think the important thing which we have picked up is the entire value chain which need to be very agile in this digital age to really curb this economic crime which we are looking at right now. Imran, coming to you.
Thank you, Asad. I think I'm actually a little bit more hopeful in terms of the nexus between digitization and fighting economic crime, because unlike any time in history, we have seen through the Paradise Papers and before that through the Panama Papers that if either an electronic record of any transaction is created even 20, 30 years ago, or even a photograph of a physical documentation, right? You can really, you can go through that and uncover that even into the future, right? So obviously, regulatory authorities in South Asia in particular may not have the capacity today to prosecute these things, but I am absolutely confident that going forward, because these electronic records exist, I think we're in a very, very good position in terms of enforcement. So I am actually I'm a great fan of the digitization process. That's the first part I want to add. And the second part I want to add is this whole notion of anonymity around digital crimes, etc. I think is a little overblown, because very recently, a very quick example was where but of course it's a bigger regulator, the US was able to uncover, right, who attacked the Colonial Pipeline, which is, in the US. I think those Russian cyber hackers, they were able to, go through 23 different sets of, accounts to find the exact Bitcoins that were used and take the whole amount back, which shocked the entire, crypto community, because there is no anonymity. It's a myth, right? It's difficult, but it's not impossible. So I think if regulators cooperate, I think nothing is, because ultimately, if you follow the money, you can really uncover, economic crimes. It's difficult, but not impossible.
Thank you, Imran. I think it's a very valid point, and I think Dr. Mizanur also highlighted that the ultimate beneficiary and this digital footprint you are referring to right now, everybody is leaving a certain digital footprint. If we start having that capability to track it back, so I think that's where we follow the money and we can get to the where the crime was committed. So now there's two questions I'll ask everybody. One, I would like to have a top 2 or 3 recommendations that what we should do, and it should not only as a regulator, you should be doing as a society, as a professionals, what we need to do in a value chain to really curb that economic crime. And the other question is the collaboration, because this economic crime is not is happening in a one jurisdiction. There is a collusion around the multiple jurisdiction that's make it successful. If you try to curb it at a one jurisdiction alone, it will start happening somewhere else, and so there are beneficiaries who will be looking at a different jurisdiction to perform the similar activity. So how we can achieve that collaboration, because the level of or the number of players which are involved, like auditors, the regulators, the lawyers, the courts, banks itself, and the business people as well, and the shareholder, they have got their own intentions. So how we achieve a collaboration across the different organizations and then among the different economies or the countries, and what are the top 2 or 3 recommendations you would like to put forward, which we can use as one of a guiding principle to really curb this economic crime which is taking place. So we will start with you, Dr. Natsis.
Thank you, Sajid. And in terms of top recommendations, I think the first would be the use of technology by the regulators, by the supervisors, by all the players in this ecosystem or in this value chain. So the technology can be a friend or it can be a foe. And as has been rightly pointed out by Fuad and by Imran, that the technology has provided fraudsters and criminals a diverse way to undertake their activities and to do it anonymously and do it cross-border. That makes actually the apprehending these criminals difficult. But so the use of technology by the regulators and by the other players in that ecosystem is very, very important. So in terms of supervisors, of course, there is a lot of talk in terms of RegTech, in terms of SubTech, and I think all the regulators they are moving towards that direction. The reason being, it is simply now becoming impractical to regulate the sector that you and do a good job without the optimal use of technology. So that's I think that's the first thing. The second is the accountability. I think it's very important. As for example, Dr. Rahman mentioned the episode whereby the auditors didn't do their role, the rating agencies did not do their role. So it is important where these sort of, for example, episodes are unearthed, then the people who didn't play their due role or who actively connived with these sort of people, they should be taken to task. And again, it is very important that all the players in this ecosystem, they play their due role. For example, there are There are many like self-governing bodies in terms of, for example, accounting profession. They should then be ready to take their members to the task where they see that there are failures. The third is and Sajid, that you also referred to, and that is the collaboration and coordination, both domestically and internationally. And Mr. Amir, the chairman, Security and Exchange Commission of Pakistan, he actually also emphasized it, and he also gave an example of a particular episode whereby the SCCP was able to work with law enforcement agencies and other regulators to take an effective action. But while domestic collaboration is relatively easier, I think it is the international collaboration where we are lacking, and especially as I earlier mentioned that the technology enables the fraudsters and criminals to sit in one location and do a crime in another location. So, for example, there in a particular case, a system of a financial institution in Pakistan was compromised, but the funds were withdrawn in Eastern Europe and some other European countries. So it is very important that the regulators as well as the law enforcement agencies, they are able to collaborate cross border. Now it is actually it's easier said than done. It is very complicated and very difficult. It can't be done on bilateral basis. So there is a need of some international conventions or some sort of international treaties that requires jurisdictions across the globe to ratify those conventions or treaties and then become part of that. So one example is, for example, the sharing of non-resident tax information. There was a European Union treaty, there was a requirement by United States of America, and now most of the jurisdictions, as per my understanding, are actually sharing that information, and that is actually proving to be a very effective tool to curb tax evasion. Another example is, for example, recent accord that has been reached in terms of a minimum global tax on, for example, these tech companies who operate across the globe. So, from my perspective, I think these three would be perhaps important ones.
Thank you, Dr. Sir, and thank you for your contribution. Meanwhile, our audience, we are also requesting the audience to bring their questions. Some of the questions are there, so we will be sharing those questions. Aksa will be helping us to really bring those questions up. Some of the questions we can see in the chat at the same time. So, Dr. Rahman, and if I come to you, so the same thing, the collaboration, I think Dr. Nayat highlighted that it's difficult task, particularly in terms of when we go for the international collaborations, and how we can achieve the collaboration across the different jurisdictions, and what are your top 3 recommendations to really curb that economic crime? Dr. Sab, you are on mute right now.
Yeah, can you hear me?
Yes, we can.
I will pick up 2 points. One is that the regulators, they have a critical job to enforce prudential corporate governance regulations so that management becomes separate from the board, and management to serve all stakeholders, just not the family controlling shareholders. In order to do so, 2 auditing, which is being done, I think, across Bangladesh, Pakistan, and India. One is the external financial audit, and the other is internal control audit. These 2 audit work should be monitored more meaningfully by the regulator. And this job can be achieved largely by resorting to digitization. If we can go for extensible business reporting language, for example, which is now in operation across North America and Europe, this XBRL can be a platform serving all multiple regulators like Securities Exchange Commission, Central Bank, National Board of Revenue, like Tax Agency, and also other regulatory bodies. So the XBRL can be a platform for seamless, real-time, online submission of financial data and also non-financial data, because transparency is the ultimate end, and transparency can be achieved not by manual submission and manual checking, because the volume of data is rising very fast. Non-financial data is also coming in huge volume, and that is difficult to monitor or check by any human efforts. So I think this is where even developing countries can invest now to bring in this capacity building. XBRL can be an important instrument, and this technology infrastructure is very fast evolving every day, and it is addressing, even AI can be employed to read through all these non-financial disclosure to check where and how these symptoms are lying. I think these are the areas where regulators and government across countries should now focus on for making difference. Thank you.
Thank you, Dr. Sava. I'm a big fan of XBRL myself. I think we will like to see that being implemented in more and more developing countries. And I think the monitoring and the quality of audit and having a regulator or the oversight over the audit, I think that's becoming more and more a hot topic now, even not only in a developing country, but also in a developed country, how these audits are being done and monitored at the same time. So Imran, your views, collaboration, as well as what are your top 3 recommendations around the economic crime and how we can curb it?
Yeah, I think for me, the 3 real main recommendations would be: number 1, learn from what works in other jurisdictions, right? One of the things that the US has done very well is they pay whistleblowers, right? Recently, the US government paid $200 million for a whistleblower from Deutsche Bank who uncovered, where the government of the US got back 1.2 billion in a settlement. I think in South Asia, we rely on the altruism of people, but nothing works like, self-interest. So I think we need to start looking at things like paying whistleblowers a percentage of what is recovered in economic crime. And I think that will be, something that works. Number 2, I think we need to move towards, empowering our civil society more. As a former CEO of the Sri Lanka Press Institute, I can tell you that journalists play a huge role in terms of uncovering economic crimes. And I think we need to empower civil society, so journalism, NGOs, other civil society organizations that can really work towards uncovering this and tackling this. The third thing is, I think the most critical thing for me is moving towards a cashless society. And I think that's something that next year Sri Lanka will be introducing the most advanced digital ID in the whole world, apparently, where with a single thumbprint or a retina scan, you could do numerous transactions, including just walking through the airport, right? And then that's for a developing country to leapfrog several layers. I think it's like almost like like a system that is in China, which is so advanced that you can really remove a lot of the loopholes. So I think those are the 3 main recommendations. In terms of cooperation, I'm also a little bit of a believer that the regulators in developing countries need to start name calling and shaming some of the regulators in the developed world for their inaction in terms of financial crime. I think that there is allies for regulators in the developing world, particularly in the Western media, who are quite happy to highlight the lack of cooperation from the developed world regulators. And I think that is some innovative approach that I think regulators from the developing world need to look at. Because I think on the other side, the West has done enough of that towards the developing world. I think it's about time the developing world towards, because if you look at the recent Paradise Papers, you realize that one US state has $380 billion of funds where you cannot even find the beneficial owners. Right, that's just one US state. So I think that is something that can work. From a South Asian level, there needs to be genuine cooperation. I think, and regulators are moving towards that. But I also think a little bit of hard tactics towards the regulators in the developed world need to be taken as well. So I think that's a route that we need to look forward, because this is the money of the people of South Asia, and I don't think anybody else other than the people of South Asia have right to that money. And I think we should do everything we can to get that back.
Now, thank you, Imran. I think that's a good recommendation, which Dr. Nayat also referred that the international conventions which we can. So naming shaming is a one part, but definitely we require an international convention which can help us to really bring that money back if identified and prosecuted as a criminal proceeds. Fawad, coming to you. Collaboration
Sure.
and the top 3 recommendations.
Absolutely. So I'll pick up from what just Imran spoke about, actually having international practices implemented or adopting certain practices which are good to counter such sort of cyber attacks. So the first recommendation I would give is setting up a maturity assessment tool. So we know we've got certain regulations, we've got obligations, we've got frameworks that are practiced internationally. And our regulations are based on those frameworks from cybersecurity perspectives. However, what is lacking is the organizations knowing or performing certain control tests and assessing their maturity state step by step. And that guidance needs to come in terms of telling them that if you assess these particular controls to a certain extent, this would be your maturity state. And those control testings go on and continues to help organizations build in those controls within their environment. And those sort of things can help perform those assessments, and the regulator getting a view and oversight in terms of how organizations are operating. So my first recommendation would be having a risk-based approach and a model to be put in place with guidance to the organizations on which control should be implemented first. The second would be in terms of proactive vigilance and on the evolving cyber threats and having a robust incident mechanism. Now, how is this going to come? This is going to come through what we were just talking about, having a centralized body where such sort of threats are shared by the industry. And that becomes a consortium of information which helps the regulator or that centralized body to counter those sort of attacks wherever they are coming in from, and how we can actually improve from country perspectives or government perspectives. The third one would be more around awareness. So getting help from media is very important in terms of how people should share their information and what information is really meant to them. So I think media would help in getting these sorted out and provide awareness to people as well from cybersecurity awareness perspectives. Thank you.
Thank you, Fawad. I think Imran also alluded towards that, where we were talking about the mutual interest with the whistleblowers. So it's not only the self-interest, but the interest of the country as well as the persons who are protecting, and then having a mutual interest for recovery of money, and they empowering the civil society, include the media and everything. Yeah, Dr. Rahman, you want to add something?
Want to add one point which we possibly missed today. Our tax policy in the developing world is one area which we could not touch upon actually. Tax policy across India, Bangladesh, Pakistan, Sri Lanka, and even all the developing world is one reason for many corruption, because you will find that corporate tax rate is very high, de jure corporate tax rate is very high, but effective corporate tax rate is very low. In Bangladesh, it is 14%, but the legal tax rate is 37.5%. So the very natural question comes, why do we keep it 37.5% when we end up collecting effectively only 14% as corporate tax rate? The second one is individual tax rate. Again, here it is top line is 30% or 25%, depending on different things. But this gives prelude to individuals, particularly high net worth individuals, to evade taxes and to resort to many money laundering and criminal way to siphon off wealth out of the country and then redirect them after a few years in the form of remittance and so on to just whitewash them. So I think government, it is time for them to rethink. They should be concerned about total tax revenue, not about the rates. If we can reduce tax rates across individuals and companies to a reasonable level, and that may encourage people to be honest and to file tax returns and pay taxes, and that may help government raise more taxes than what they are doing today. So I think this is one area that may deserve much more attention and debate in future. Thank you.
No, thank you. Definitely, the tax laws and the tax evasion is one of a key area which require a certain revamp and the review. So now we'll come to Aksa, the question from audience.
Thank you so much, Sajid. And I would like to first of all thank the panel for such an engaging conversation. I think it's a very, very important conversation as well. I'll quickly go to the questions because we do not have much more time left in our session for today. And I'll direct this to Sajid first because you've been the one who's been asking questions, so we'll put you in the hot seat now. Whenever we're talking about economic crime or economy in digital age, we have to kind of keep cryptocurrency in mind. We have to kind of keep that in because it's a mammoth now. It's something that we just can't ignore. The US SEC chair actually said that let us regulate Wild West of cryptocurrency. So do you feel like it's something that can be regulated? Because a lot of countries like China and Britain and other countries, they've mostly banned cryptocurrency. Even in Pakistan, it's not really encouraged. So do you think our regulators are ready for such a thing? And I'll come to other panelists as well, but I'll start with Sajid on this.
Now, I think in the interest of time, I think the Dr. Nayat is best placed to really comment on that, how Pakistan's view on a cryptocurrency at the moment and how we are developing it and taking it forward. So Dr. Nayat, I will invite you.
Thank you, Sajid. So let me first, I think, say that whatever I say will be my personal viewpoint. The reason being that recently, a few days back, a High Court in Sindh has established a committee for the purpose of ascertaining that whether the cryptocurrencies should be regulated or not. So my own view is that the cryptocurrencies are very difficult to regulate. Actually, some of the cryptocurrencies have been designed with a view that those should not be traceable and those should not be regulated. So I will give you a very, for example, simple example. In almost all the jurisdictions in the world, there is a requirement that if you want to move cash across border, there is a limit of generally $10,000, and if you move cash beyond that amount, then that has to be notified to the custom authorities. And generally, that information that goes into a central database that keeps track of these sort of transactions. If you want to move value in addition to 10,000, you have to do it through a formal financial sector that, of course, keeps track of all who is sending the money, who is receiving the money, what is the purpose of this fund transfer, etc., etc. Now, in cryptocurrency environment, any person can send that money to any other person in the world. And Imran mentioned that it is not really anonymous; it is pseudo-anonymous. And the United States of America was able to actually trace the ransom that was paid in a particular case recently. But one that was United States of America. So of course they have all the power and all the resources to trace that money. And the second is, and they were actually, as Imran mentioned, they were actually following the money. But in a general environment, you are not actually tracing a particular transaction. So in this cryptocurrency environment, the mere fact that a person A in a country A can transfer money to person B in country B, and there will be no, it will not be going through any centralized I don't want to
centralized system, yeah.
Centralized financial institution that can check that, for example, what is the consideration behind that transfer, etc. But many countries actually have started regulating it, but they are only regulating what we call virtual asset service providers, VASP. Yeah. actually the exchanges that transfer cryptocurrencies into fiat currencies, or fiat currencies into cryptocurrencies, but the whole other ecosystem is still unregulated in most of the jurisdictions.
No, thank you. I think that's quite comprehensive answer there. So thank you.
Thank you so much.
Any other question we have right now?
I actually have a couple of questions regarding this, so I just wanted to merge them and kind of have my own spin on it, because we get this question every time we have these conversations. And the question is that who is regulating the regulators? What if they are being corrupt? What if the people in the regulatory offices are not following ethical practices? So there is that question in itself, and we always do get that question. My question on top of that is that how do we educate our people on the processes that, because I believe economic education is something that's very, very important. And not just when we come to professional qualifications, even in when we are younger, economic education, I feel like, is financial education is very, very important. And our people don't generally know how these organizations and how these bodies work. And how can we start educating our people on that? So I'll direct that question to you, Sujit, as the head of ACC. Yeah.
Thank you. I think it's important, like definitely how to manage finances and what is legal, what is illegal, and what is the borderline. Even that's, we should be very, very clear where the lines are being drawn, and the role of regulator and the implication if we are not in a compliance mode. So there could be things which we may not like the taxation, definitely highlighted as a one of the area. But if it's a law of land, we have to comply with it. We can raise our voice, but we can't create a scenario where we actually start getting into the evasion or illegal. So these are the things which you start from a school education, college education, and I'm sure there's a mechanism, like I remember from SCCP and State Bank as well. There's a financial awareness and inclusion initiatives where this information is going to the grassroots level. It's take time. So if it's not part of our initial DNA, then it takes time. But I think there are very strong initiatives from the regulator side to really create that kind of awareness, as we believe. And your question around that, who will be regulating the regulator? I think there is a concept of, definitely in a digital age, I'm sure Imran and Fuad will also concur with that. The technology itself is becoming the visibility and the data and the transparency. It's becoming one of a key area where the regulators are getting more visibility that how the rest of the teams are doing and what's happening there. And then they have got the internal mechanism, and the same audit and the internal audit and the control mechanism exist within the regulators as well. So regulators and a lot of people, and like even the accounting body, they are self-regulating, and then they have an oversight. Similarly, the regulators have got a self-regulation, and then they have a certain oversight either through the ministry or other mechanism. So anybody wants to add something around that comment? Dr. Rahman sir?
Let me add something very quickly. I think in the US recently, they found out that a couple of presidents of the regional feds had been trading in stocks, while also making decisions that affect those stocks. And now I think the Federal Reserve has taken decisions in terms of, the kind of trading activity they can take. I think the key there is civil society, journalists, transparency in terms of all, conflicts of interest, conflict registers, things like that, I think is key. But I think ultimately, I think we must also, I think regulators are also aware that there is oversight in terms of parliament, in terms of, also, again, moral, there's some sort of moral, things from Regis and other leaders. I am a great fan, actually, of incorporating some religious figures in terms of fighting corruption only. And I think that's not something we have utilized enough in our societies, because whether, it's Buddhist monks in Sri Lanka or, Islamic, I think they have a huge moral and moral suasion, that they can bring to bear on corruption. And I think that that's something we haven't really used. And I think that's one part of civil society we can use as well.
Thank you so much, Imran. We do have just 1 minute left in the session, and I did have a couple of other questions, but I think we'll cover them in the next sessions. I would like to tell my audience that please do attend we have 4 more panel discussions. Please do check in your respective markets that at the time that they are happening and who is joining in. So you will be able to find that in your relative markets, Facebook and LinkedIn pages. I would like to thank our partners for today: CFA Society Bangladesh, CFA Society Pakistan, CFA Society Sri Lanka. Then there's HPL, ICMA Pakistan, Pakistan Business Council, Pakistan Institute of Corporate Governance, Pakistan Stock Exchange, Pearl Initiative, and Sri Lanka Institute of Directors. Thank you so much for your contribution in today's session. And I would again like to thank my panelists, my keynote speaker who had to leave. But thank you so much for joining. Your insights were more than valuable. Thank you so much. And we'll see you all tomorrow.
Thank you very much.
Thank you very much.
Thank you. Bye.